IMF has just revised slightly up its forecast for the world, so slightly to 3.3%, so that's not so bad. But as you said, it's below trend in the past decade. But I think there are two words we need to pay attention to in the IMF forecast with respect to the way it saw the economies of the world. One is divergent and the other is uncertain. So the different economies are growing differently. The US is doing better. China got its growth target of 5% last year, but the forecast for this year is 4.6. Europe is forecast has actually gone down, low growth. And the emerging markets in Asia, some are doing well. Africa is doing above trend growth. So, but what is very evident is that we really need to push from almost all regions of the world. And I think there are four things that I'd like to mention we need. The first and foremost, I think, is either maintaining or restoring, depending on the economy, macroeconomic stability and good management. And that means that inflation that the IMF has shown us is coming down globally. Yes, the central bankers have done a good job, but there's still a lot to do. And many countries are still struggling, and it's hitting the poor the hardest. At the same time, there's a need for fiscal consolidation in many countries, with fiscal deficits getting quite high, and debt. We heard earlier on the Swiss president talk about high levels of debt in many countries and debt service. So we still need strong macroeconomic management if we're to restore growth. I think the second thing is openness and predictability of markets, of global markets. Why is that? This has delivered from us, as we heard repeatedly from all three speakers, from President Ursula von der Leyen, President of Switzerland, and from the Vice Premier of China. Openness and predictability of trade has delivered. And I have to say now that in spite of all the challenges and rising protectionism, our numbers show at the WTO that trade has been largely resilient. 80%, better than the 75% we said before, of world goods trade is taking place on WTO's most favored nation terms, on WTO rules. I think this is something the world needs to preserve. So it's delivered, we can deliver again. I think the second thing we need to think about is how to deal with the issue of building further resilience in our global economies if we are to grow. And what do I mean by that? We've seen a lot of over-concentration of supply chains or manufacturing in certain sectors. And we need to build resilience by something we call re-globalization at the WTO. I will not seize Borger in promoting this, because what we're saying is it's true. The world actually needs to deconcentrate certain supply chains and certain manufacturing. It's not normal that 90% of something like chips that the world needs is manufactured in one place, or 70% of minerals are processed in one country, or 80% of vaccines are exported from 10 countries. So how do we decentralize supply chains? How do we diversify? And business is actually doing this already, so that we can build resilience. At the WTO, we are promoting an instrument that will help countries strengthen their economies and attract investment to help this re-globalization, which can create jobs in place. I heard President von der Leyen saying the EU is actually moving in that direction of trying to promote local manufacturing, not just coming into countries, coming into Africa and extracting and taking away, but actually putting the supply chains on the ground. I think that will create jobs, make people stay in place instead of trying to migrate elsewhere, and create wealth. And I think the fourth and last thing I'd like to say is technology and AI. We have the work we've done at the WTO shows that if we adopt, if there's the ability to adopt AI on the trade side at any rate, it really increases productivity, lowers trade costs in such a way that we can have double-digit growth in trade, from now till 2040, about 14%. If we are able to adopt this in an even manner across the world. Of course, we have to deal with issues of the digital divide in developing countries, which we have to overcome.
President Trump took office just yesterday, and already he's issued a lot of executive orders. And his policies are pretty well known. He's going to have a massive tax cut, which is designed to spur economic growth. I think he is going to try to impose some tariffs. We don't know the extent of them, but he's going to do that, and I think to get greater trade cooperation between various trading partners in the United States, maybe using it as a bit of a negotiating tool, but we'll find out. I think the principal problems the United States will have going forward are several in terms of economic growth. One, get inflation down from where it is, still a little bit higher than people would like. If it's down a little bit more from where it is, the Fed will begin to lower interest rates a bit more. Secondly, getting the tax cut and other regulatory changes that President Trump wants implemented and into law relatively quickly. And he has a big agenda for changing regulations and other things that will, I think, spur economic growth. Third, getting the ability of the natural gas and the oil business to be able to increase even more from where it already is. It's producing 13 million barrels a day, which is the highest we've ever had in the United States, but I think he believes he could do more. I think the biggest impediments to growth are, I think, solving, and for the world generally, solving the wars in the Middle East, including resolving some situations with Iran. If you can make progress on the Middle East and you can make progress on Russia, Ukraine, I think you're going to see a lot of economic growth do quite well around the world. The U.S.'s problems are not the biggest problems. I think the biggest challenge for economic growth around the world I see are the global South, which because of the challenges of the last 15 years, the global South went further behind the developed markets than maybe would be desired. So, for example, the crisis of 07, 08, 09, the problems of COVID, and the problems of inflation, I think adversely impact the global South more than would certainly be desired, and more than it did the developed world. And then you've got the new frontier of artificial intelligence. If artificial intelligence and other new technology developments are going to have the real great impact on the world, they have to be made available as well to the global South. The United States can't just be a country which has the great advantage of artificial intelligence and other technology improvements and not share them in some fair way with others around the rest of the world.
Over the years, Europe has tended to perhaps not understand our competitive situation and the strategic position that we find ourselves with a very strong United States and a very strong China. And therefore, our competitiveness has been challenged over time. And I think these two reports and other reports has now really put the facts on the table, showing that we really need to go forward. So what is being proposed around R&D investments, around structural infrastructure investments in the green sector, more into AI and computational power, etc., are very good rules and very good ambitions to have with us. I do think that we have to also understand that Europe by itself is a very large market. So we do have the possibility to get the scale here, but we also need to get the confidence back to really say that we need to get moving and cannot wait anymore for things to solve it by itself. And I think this has been a real good wake-up call for Europe. But in addition to that, I think that the Commission has always put together a new trade deal with Mercosur and with Mexico and so on. I think that has proven that the European the attractivity of the European market is there. But I also think that we have to understand that Europe will not start moving without getting more consumer confidence and also getting ourselves in a position to support the entrepreneurs. If there's anything I'd like to add from her speech today is the focus on entrepreneurship. We should really understand and learn, I think both from the United States and China, how do we create an ecosystem that will really support entrepreneurs. And for that, we know we need a singular capital market that is unified. We do need a number of institutions that can provide more risk capital, private risk capital. And there are a number of other factors that will help entrepreneurs to develop their business.
So there's a clear strategy, I think, that the U.S. is embarking on, and that will spur growth in the U.S. And I think that'll make it very attractive, I think, for investors. Asia, I think, continues to be a very important, I think, continent for growth. But I'm going to, if you allow me, just kind of bridge back into that by using the UAE as an analogy. Use the UAE as an example of how, because I think it's very interesting what the UAE has done over these last 20 years. Right now, I think from an economy that was predominantly dependent on oil and gas and on energy as its main contributor to its GDP, today the UAE in 2025, when I look back at last year, just a couple of interesting data points. I was looking at a study this morning. Abu Dhabi was rated the safest city in the world for the 7th year running. 3 out of the 7 main cities in the UAE were rated in the top 10. Stanford issued a study in the 4th quarter of last year where it rated the largest AI nations in terms of countries that they rated the most vested in the AI space. The UAE ranked 5th in that. In terms of FDI, behind the United States, the UAE came 2nd in terms of FDI attractiveness, or attracting FDIs in 2024. That's huge for a country the size of the UAE. I would complement that with, in 23 and 24, the largest number of high net worth individuals moving, in terms of global movement, moved into the UAE, number 1, ahead of the United States, Singapore, and many countries in Europe. So these are, it shows you that you can create a growth story. Today, the economy has, I think, $500 million. That was the GDP of the UAE, growing at around 6%. That will continue. The market capitalization is about $1 trillion right now in the UAE. So there is a clear case, I think, for the UAE when it comes to growth as an example of, in this new world, how to create growth and to diversify from one sector to a multifaceted economy with wise, I would say, clear, steady leadership and an execution plan that the UAE has had over these years.